So today we're going to tear into this really fascinating report from Sprott, and what it points to is nothing short of a seismic shift in the global economy. It looks like the whole world is starting to move away from paper wealth and pivoting towards something you can actually touch, hard assets. Let's dive into why. And really, it all comes back to this one kind of strange question, right? In a world where everything is digital, why are the biggest global players suddenly hoarding physical metal like it's the 1800s? The answer to that is literally rewriting the economic rulebook for every single one of us. All right, so first up, let's talk about the first major theme here. This isn't just some small tweak in strategy. We're talking about a completely new global playbook being written as we speak. And the word you're going to hear a lot is deglobalization. For decades, the whole game was about efficiency, making things as cheap as possible, no matter where in the world that was. Well, that game has completely changed. Now it's all about national security and being resilient. And this isn't just a passing trend, it's a fundamental rewiring of the entire global system. And you can really see the difference here, right? It's like night and day. The old playbook was all about working together globally to keep costs low. The new one? Nope. It's all about looking out for number one, national security, self-interest. And that means more trade walls and countries literally hoarding resources for themselves. And look, the knock-on effects from this are huge. Bringing all that production back home is way more expensive, which basically locks in higher inflation for the long haul. It also means countries start using resources as geopolitical weapons, which kicks off this global scramble for critical minerals, and it fuels a flight away from the US dollar towards neutral assets, things like gold. So this new playbook, this whole deglobalization thing, well, it has a really serious side effect. And that brings us to our next big theme, a massive worldwide drop in the value of the money that's sitting in all of our wallets. And if you want to know why, just look at this number. By 2025, U.S. public debt blew past $38 trillion. That's a figure that's almost impossible to wrap your head around, and it creates a gigantic problem that governments somehow have to solve. Now, you can see from this chart, this isn't exactly a new problem, but the acceleration, that's what's just staggering. The debt has literally doubled in just the last 10 years. When you have a trend like that, it backs governments into a really tight corner. And that leads to this tricky situation that economists call fiscal dominance. So, put simply, it just means the government's debt is so huge that the central bank can't really focus on its main job anymore, which is fighting inflation. Its new number one priority becomes keeping the government's borrowing costs from exploding, even if that means letting inflation run hotter than it's supposed to. Okay, and this is the part you really gotta get. This isn't some kind of accident, it's a deliberate policy. They call it running it hot. By intentionally letting inflation run higher, governments can actually shrink the real value of those massive debts they owe. The problem? Well, the catch is, it also shrinks the value of your savings right along with it. So, if the old rules are toast and your money is worth less and less, what do? Where does the smart money go? Well, that leads us right into our third theme, the great pivot. The smart money is making a decisive move towards hard assets. For starters, the old investment playbook is getting thrown right out the window. For decades, right, the 60-40 portfolio, 60% in stocks, 40% in bonds, that was the absolute gold standard. But as this quote makes clear, in a world where inflation is here to stay, bonds just don't protect you anymore. They lose value right alongside your cash. And listen, it's not just regular folks like you and me making this shift. Look at this chart. We're talking about the world's central banks. They've gone on an absolute gold-buying spree. They are actively getting out of currencies and piling into a physical, neutral asset that they know they can trust. Okay, so when the biggest financial players on the planet make a move like that, it's really no surprise that it's lit a fire under the oldest forms of money on the planet, gold and silver. Let's dig into what's been driving this incredible comeback. Gold's recent comeback story, it's really been this series of dominoes falling. It all kicked off in 2022, when Russia's currency reserves were frozen. That was a huge wake-up call for every country, a sign that currencies held abroad aren't really safe. Then you had China stepping in as a massive buyer. By 2025, this whole idea of the debasement trade just went completely mainstream, sending investors everywhere scrambling for a safe haven. But you know what? As big as gold's move was, silver's was, well, it was on another level entirely. A staggering 148% gain in 2025 alone. So what in the world was behind that incredible performance? Well, the reason silver went on such a tear is because it's got this amazing double life, right? On one hand, it acts like a monetary hedge, just like gold. But on the other, it's a critical industrial metal. You absolutely need it for solar panels, for electric vehicles, and for the massive infrastructure build-out for AI data centers. So all this surging demand hit the market right at a time when supply was tight and inventories were already low. And boom, it created a massive price squeeze. But look, this isn't just a gold and silver story, not by a long shot. The same exact logic, scarcity and strategic importance, is playing out across a whole bunch of other critical materials that are essential for this new world we're in. I mean, just take a look. Copper, which is absolutely essential for electrifying pretty much everything, has suddenly become a huge strategic bottleneck. Uranium is now critical, not just for energy security, but for feeding the massive power demands of AI. And rare earths? They are ground zero in this global push to rebuild and secure supply chains. And you have to understand, this is not just traders and markets talking. This is official government policy. To break China's stranglehold on rare earth minerals, the U.S. is taking some pretty unprecedented steps. We're talking direct investment in miners, setting price floors, even guaranteeing that they'll buy everything that new facilities can produce. In this new world, security of supply is every bit as important as price. So after all that, it really leaves us with one last really big question, right, for all of us. As the old rules of money and global trade are being completely torn up and rewritten, we have to ask ourselves, in this new world, what is truly valuable?